Hey everyone, welcome back to Corporate Decoder, the place where we try to find the hidden secrets in company reports, and today's report is a real doozy. Turns out Vestand Inc. is telling us that a big chunk of their past financial reports might just be garbage. Stick around because this is going to be juicy. Vestand Inc. has just dropped a bombshell on everyone. They're saying they can't trust their own earlier financial statements. Think of it like finding out your favorite restaurant's secret sauce was actually just spoiled milk. It is that kind of serious. This is an 8K filing with the US Securities and Exchange Commission. Or CC companies file these when something really important happens that their shareholders need to know about right away. And in this case, what happened is pretty big. The company, Vestand Incorporated, is admitting that financial statements they previously released over several years are unreliable. This isn't just a small mistake here or there. This is a whole bunch of past reports going back to September 2022 that they are now telling investors and the public not to trust. Their shares trade on the Nasdaq Capital Market under the ticker symbol VSTD, so this announcement could definitely shake things up for anyone holding those shares. Vestand Inc. is flagging itself as an emerging growth company, which basically means it is a younger company that gets a bit of a break on some reporting rules. But this current situation is far from a break, it is more like a major roadblock. The main point here, the big news, is that the board of directors, after looking at reports from their audit committee and an independent accounting firm called Owen Chung LLP, has decided that previous financial statements should not be relied upon. This non-reliance applies to a long list of reports. We're talking about financial statements for the periods ending in September 2022 and 2021, both audited and unaudited. Then it goes through 2023, covering the whole year and various quarters. Then it stretches into 2024, covering the entire year and its quarters. And even the first 3 months of 2025. That is a massive amount of financial data that could be wrong. Normally, when a company messes up, they issue corrected or restated financial statements, and Vestand Inc. says they are working on doing just that. But the key phrase here is preparing restatements. It means they haven't done it yet, and it could take time. Why did this happen? The company's board launched an investigation into what they call inaccurate disclosures, inconsistent record keeping, and other actions by the company's past top managers. To help with this investigation, they hired O and Chung LLP. And what did O and Chung LLP find? They issued a report pointing out problems like missing documents, inconsistent records, and other inaccuracies in those old financial statements. Basically, the books don't add up, and some things are just missing. The audit committee looked into 5 big areas. First, they're checking on loans between different parts of the company, the intercompany entities. This can be a common area where problems pop up if not managed correctly. Next, they're examining bonus payments connected to the company's initial public offering, or IPO. IPOs are big events with a lot of money involved, and sometimes accounting issues arise around these events. This one's a red flag. The report mentions fictitious or improperly recorded liabilities of approximately $700,000. Fictitious means fake. So they're looking into nearly $750,000 that might have been wrongly booked as debt or obligations. That is a serious amount for a company of this size. Then there is something called a warrant issuance to a company named Harangue Company. A warrant in this context usually gives someone the right to buy shares at a certain price, and how these are accounted for can be complex and a source of error. And finally, a big one, securities like stocks or bonds were apparently issued without getting a thumbs up from the company's own board of directors. This is a major governance failure. Now, here is the kicker. The company says they haven't finished their review yet. The expected financial impact of these restatements is still preliminary and could change. They also can't say when they'll be able to file these corrected financial statements. Given the nature of these issues, Vestand Inc. is also looking into taking legal action. That suggests they believe there might have been intentional wrongdoing. As a result of all these inaccuracies, management has concluded there are material weaknesses in their internal controls over how they handle financial reporting. Think of internal controls as the guardrails and alarm systems for a company's finances. If they're weak, it increases the risk of errors and fraud. To try and fix things, they've been making some changes. They recently appointed Jae-ho Yoon as their new Chief Financial Officer, and Andrew Yoon has joined the board of directors and will also serve as Chief Compliance Officer. These moves seem aimed at strengthening their financial and compliance functions. On top of all this, they've decided to bring in a new independent accounting firm to audit their books. This suggests a complete shake-up in their auditing process. Now, like most corporate decoder videos, we have to mention the forward-looking statements. This is basically a disclaimer where companies say, hey, what we're saying now might not happen exactly as we expect because of risks and uncertainties. And the risks for Vestand Inc. are pretty clear. They mention timely completion of restatements, the possibility of more information coming out, uncertainties about their internal controls, and potential legal or regulatory actions related to these mess-ups. This is a company facing a serious cleanup. Their filing also includes exhibits. One is the cover page interactive data file, which sounds fancy, but it is really just for machine readability of the report itself. Putting everything together, Vestand Inc. is in a bit of a financial and accounting crisis. They've admitted their past financial reports are unreliable due to issues stemming from past management, including potential fictitious liabilities and unauthorized securities issuances. They are in the process of restating these financials, bringing in new leadership in finance and compliance, and even changing their auditors. This is a major setback, and investors will be watching very closely to see if they can clean up their act and regain trust. Now, looking at this situation, Vestand Inc. is facing a massive challenge in rebuilding confidence. The fact that they've identified so many serious issues, from potential fake liabilities to unauthorized stock issuances, points to significant problems in management oversight and internal controls in the past. The appointment of new leadership in key financial and compliance roles is a positive step, but it is just the first step in a long recovery. The uncertainty around the timing and impact of the financial restatements is a major risk. Until these are resolved, investors will likely remain hesitant. The potential for legal and regulatory action also adds a layer of significant risk for the company's direction. The immediate focus must be on transparency and completing this accounting cleanup accurately and quickly. The weakness here is clearly in their past financial integrity and governance. An opportunity exists if they can successfully navigate this, prove they have solid controls, and present reliable financials going forward. But the path is fraught with peril. Alright, that is our breakdown of Vestand Inc.'s very rocky latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.